This conference will now be recorded.
Good morning. We have a new member here, John Franco, on Sunday, February 9th, 2020, approximately 10:23 a.m. This is a personalized one-to-one training sessions, what we call ACS, Advanced Coaching Sessions, for the benefit of all new members. This session will be recorded, uploaded to the YouTube channel, but will remain private for viewing by Mr. Franco at any given time. Full disclosure, this is purely for financial education and not for any solicitation or advice. So let's kick off. On the screen, I have my drawing board so that I can write certain things down. So let's start off this by addressing questions that you have, and I can put in my 2 cents and move from there. So, um, so first question, go ahead.
Yeah, well, and this is a question that I think that a lot of people like have
So can you
asked.
can you can you can you fix your mic a little bit so that you're coming off a little bit?
Better.
This is much better, sir. Go ahead.
Very good. I was saying that I think that a lot of people like that get into this have the same question.
Of course.
When we do calls and puts, they all have a date, right? And people, for instance, me personally,
Oh,
I
hold on.
didn't
Okay, okay.
know.
Let me stop you for a second. Okay, fix your mic again because you again went, kind of going back and forth.
All right, give me 1 second. Let me fix
Yeah,
this
yeah.
up for you.
No problem. No problem.
All right, I think you'll hear me better now.
Yes, much better. Okay, so start off with the question. So when I put out the alerts on calls and puts, go ahead.
Yeah, calls and puts. They all have an expiration date.
Yes.
When is the very last moment that we can actually sell those calls,
Okay. Okay.
usually, or puts?
Okay, so basically, let's look at a real life example, which is what's going to answer the question. Oops, sorry. Where'd it go? Where'd it go? Where'd it go? Okay, so let's look at a real life example. Okay, so here, so this is Moderna. This is the company that's working with working to create the vaccine, and I believe they're going to do it real fast, faster than what people think. And so here's an alert: February 21, 22 and a half calls, right? So you have you see that, correct? Hello, hello, Franco, I can hear you. Test, test.
Can you hear me better?
Well, now you're back, not better. You disappeared there for a minute. So,
Yeah.
all right. So, let me explain this first, and I'm going to give you a couple of links
Mhm.
on YouTube that you guys need to listen on your
Got it.
own, just so
Uh
you
huh.
understand the basics of 1, 2, 3. So,
Uh huh.
let's take a look at this alert. Okay, this is Moderna, mRNA. This
Mhm.
one I alerted the February 24. So keep
Mhm.
looking at this thing. So February 24, I'm going to put 221, and
Mhm.
that's the expiration date. Okay, the strike
Mhm.
price, the strike price is 22 and a half, right? So
Mhm.
that's what we expect the stock to go above. mRNA actually closed at 23.18 at the close. So this is the strike price. This is the
Mhm.
dollar. This is the date. Okay. So simple answer to your question. The expiration date means that we can hold the calls till the 21st of February, which is 2 weeks from now. All right, 21st of February. Technically speaking, we can sell the calls on the last day. So here's the question one, here's the answer. You can sell the call on the last day of the expiration date, which is February 21st, till 4 p.m., till market closes. Okay, now at that point, if the price is well above, if the price, I'm going to put PR, price is much higher than 22 and a half, then you are going to make, that's profits, right? That's profits. Now, so first, answer to your first question is you can sell it till the last day, 4 p.m. That's when the expiration is. Now, what happens in reality, in the real world of trading, is where if the stock is moving from 22 and when I alerted it, it wasn't 22 and a half. When I alerted it, we'll look at the chart in a second. It was less than 22 and a half. I believe it was 21. It started moving pretty fast because of that news. We were long this stock before, and it was really not doing much. It went up a little bit, then it kind of came down a little bit, and then all of a sudden it started taking off on Friday because it was officially announced, as I put there, that the National Institute of Health, which is basically, the governmental health agency, is working directly with these guys, and so all of a sudden these guys are the hero. Okay, because there are other companies that are working on the vaccine too, but they're working directly with Moderna. And so fantastic, great. So jumped in. So let's say 22 and a half. And if it keeps on going to, let's say it's at 23.20 at the close on Friday, let's say by Monday, I believe it's going to be 24 plus, just guessing based on the momentum and all the stuff happening with the coronavirus. And let's say by not the 21st, let's say by next week, expiration is next week's expiration. When is next Friday? Friday is weekly expiration.
The 14th.
The 14th. So let's say by the 14th, it's at 26. Okay, which is very possible. So this is by the 14th. Make this very simple. So by that time, these calls that we bought, when I originally alerted it, it was around the $5, $10. All right. So this was the original. I'm going to put original entry. Okay. Let's say somebody bought it at $1.20. That's fine because it was moving quite fast. So let's make it simple. Let's make this $1 roughly. Okay. Give or take just a few cents off. So by the time it goes to 24, 26 by next, and this is just projecting, then these calls are going to be what we call in the money. That means they are above 22 and a half strike. All right. It is already in the money right now by roughly 70 cents. The calls at this point, this was $1 when I alerted. It was less than 22 and a half. Now it is at, Moderna closed at, checking, making sure, because I have it on my other screen. What is mRNA? It's like when you look for something, I got so many symbols here. It closed at 205. Okay. So now it's at $2.05. So it's already up. It's already up 100% roughly. It's up about 90%, from where I bought it, which was around $1.05. I added more at $1.10. And I added pretty fast. So okay, 205. By the time it goes to 24, that thing should be roughly $4. By the time it'll be more than 3. So let's call it 3. All right. By the time it goes to 6, it will be 24. It'll be somewhere around $6, if not more. So that's a serious thing. Now, here is the real thing about trading. As the stock is moving higher, you can basically, if I could have sold all of these for 100% profit on Friday, right? 100% profit. I chose not to. And but as the stock price is moving higher, you paid for 22 and a half calls. You paid roughly $1. Now they are $3. So now you're up 200% on your money. right? So the smart way of doing it is to sell that. You sell, take your 100%, you sell this, take your 200%, and then buy what we call rollover. You see me write that quite a bit, right? Rollover. So you roll over to higher strikes. In other words, you buy the expiration, you stick to Feb 21. So higher strikes, so you stick to 221, except now the stock is at roughly 24. Okay. So at this point, you want to buy either the 24 or the 24 or the 25 strike price calls, which will be cheaper than $3 that you sold it, because you are pushing up the strike price. You got it?
Yes.
So you buy them at you sell it there, because now you bought it at 22.5, it's at 24, you're well into the money, you're above your strike price. So what you do is, I would recommend that to buy the 221, 24 or 25, 24 or 25 calls, which most probably at that point, which is slightly higher than where the stock price is at $25, you'll probably pay maybe $1 again, maybe $1 or $1.50. Let's call it $1 again. So basically what you're doing is you're keeping most of your profits, and with some of that money, you are buying cheaper calls because they're moving higher, and you keep on rolling up, rollover up, if you want to call it. If the stock hits 26, then and the stock has real momentum. That's why we follow the charts so carefully, because it's telling us whether or not it's got more juice to move higher. This stock has a lot of room to move, to be honest with you. I don't know if it's going to do that right away, because there's a lot of factors that determine it, not just the fact that they are working to develop the vaccine, but it is what we consider to be a hot stock right now because of the situation outside. So the bottom line is, as the stock is moving higher, you want to move up to higher strikes, which will cost you less, which will cost less. So you're spending less money. And as it's moving, if it shoots up to 26, you've seen that with a lot of options, then at that point, you will basically keep your original profits and keep on saving money by buying cheaper calls for a higher strike. Do you understand what I'm saying?
I understand.
Right. So that's the way to do any type of movement on a stock as it's moving higher. Now, let me stop for a minute and explain to you in very simple terms how options work. Okay? And this will really help. I know you know how it works, but let me explain to you in very simple terms. And I do have videos on this stuff because I've explained it to other new members over the past couple of years, and it's all there on the Google, YouTube channels. Okay, how options work. An option basically has two things, whether it's a call option or whether it's a call option, which most of the times that we play, a call or put. A call means you're betting the stock's going to go higher or the market's going to go higher if you buy the SPDR, SPY. And a put option is you're betting, because options trading is just like a betting game. All right, it's like a horse betting game, it's like whatever betting game. You're just betting on the outcome, except in this particular business, like I've explained it on the webinars, you can actually put it in you actually know what your downside risk is, so that's the difference. You're not just rolling the dice. So calls and puts. Now, there are two things about options. One is called the time value, okay, and one is called intrinsic value. It's very simple. I'm going to make this simple. So let's say an option on Apple is $4. All right. So the time value, as you know, is how much time? What is the expiration date? Right. So the expiration date, how much time do you have left? So if we buy, let's say, Apple 221, we have 2 full weeks for that, for the time that you have left for that stock to, Apple closed at almost 320, 319.49. So let's say we are betting Apple will go to 330. That's the bet. All right, another $10 from here, which can happen, but don't know. So the time is expiration date. In other words, how many days you have left. Now you use Thinkorswim, they actually show you how many days you have left.
Yes.
On your thing. Okay, so how many days you have left? Intrinsic value is the underlying value. So out of that $4, let's say $2 is the time value and $2 is the actual value of the option. That's known as intrinsic value or the core value of the option. Okay, so add these two, that's why the options cost $4. Now, as we move along the date line, today is the 9th, and we are moving towards Valentine's Day, let's say the 14th, right? The number of days that you have, for the options is falling, correct?
Correct.
Because then 7 days will be gone. So we have 14 days. It'll be minus 7 days. There'll be 7 days left after the 14th, correct?
Yes, correct.
Exactly. Now this is the interesting part. If the stock for Apple, which right now is $319, let's call it 320, moves to, let's say, 325, then your option price will move higher. Both the intrinsic value, right, and the time value is going to go slightly lower because you're losing the number of days that you have, but that is going to be small compared to how fast the options are going to move. All right. So the 330 calls that we bought, as long as the stock is moving in that direction, not even there, but in that direction. All right. Then your options will most probably, if Apple goes to 325, from my experience, these options that you paid $4 for, I'm going to put O for options, or just I'm going to put C for calls. That's what we do, right? C for calls is going to move towards 6 for 50%.
Yeah.
Or maybe more, but I'm just looking at a conservative value. Now, that's the scenario that we would like to see.
Correct.
But let's say Apple from 320 basically remains at 321. And as we are moving towards Valentine's Day, all kinds of news, like, there was actually good news over the weekend on Apple. I'll talk about it tonight. Like, they are actually looking to reopen their factories like this week. So because China is really putting a lot of effort to reopening all these big factories. So Apple production is in the same region that they caught the virus, right? So that's good. So let's say, for example, there's some bad news that the virus is now growing more, and that factories are going to remain closed for a longer time. And Apple basically does nothing but kind of hangs around 321, maybe 322, comes back to 321, and basically keeps on going back and forth, right? At that point, you are losing the number of days, which we call time value, and your intrinsic value is also doing nothing because Apple is really not moving. So what happens is this value also falls. So those $4 calls maybe are down to 3, even though the stock is up $1. Because the number of days that you have, it's depleting.
Yeah.
It's like a depreciation value. You understand property, right? So it's depreciate. So it's like a brand new car. Somebody goes into the BMW the showroom, buys a brand new car, pays for it in cash, drives off the lot. The minute he drives off the lot, the car is worth $10,000 less. You know it. That's just the way it works. You know what I'm saying?
Yeah.
He's not leasing it. He's financing it. He's buying it. So it's kind of stupid to buy a brand new car, walk out. Yeah, it feels great. But the minute you drive out of the driveway in the dealer, that car is worth less. 10,000 will drop like right away if it's an expensive car. And a year later, with the mileage on the car, it's going to be worth less. So every year it depreciates, right, in value.
Yeah.
So the same thing with options is that if we are not seeing the stock move towards that strike price that
Mhm.
we want it to go to, which is 330,
Mhm.
then those options will basically start sliding in value. So if
Gotcha.
somebody holds it all the way, don't forget we bought these for February 21st, right? The expiration EXP is, I'll write it here. The expiration is 2/21. Remember, that's what that's how much time that we paid for. Are you with me so far?
I'm 100% with you.
Okay, good. So the bottom line is that we want the options to move higher before the 21st, but if it's not moving and we are approaching the 21st, which is basically monthly options expiration, that happens once a month, not the weekly, the monthly. Monthly is every third Friday of each month, just so you
I
know.
see.
That's the big options expiration. The weekly options, which expire every week, those are just to play the game in the middle. But a lot of stocks only have monthly options expiration,
I see.
which is the third Friday of each month. Third
I
Friday,
see.
not exact date, but the third Friday of each month.
Mhm.
Generally speaking, that's the day it's either make or break. So the question is, for a new trader who doesn't quite understand it, they are going to hold it till the end. In the meantime, that value that you paid $4 for on those options will almost go to zero or less. It won't go to zero, but go somewhere, let's say 50 cents, because the stock hasn't moved and now you have no more days left.
Mhm.
So in answer to this, ties in with your first question, which is a very basic but important question, is you can sell it till the last day, but the value will have depreciated substantially because the stock hasn't moved. That means the intrinsic value or the core value. Like, let me explain this to you. You understand property stuff well, right?
Yes.
That's your business, like you to try to buy and sell houses, correct?
Mhm. Mhm.
Okay. When you get a tax bill, it shows two components. When you get a property tax bill, this will make a lot of sense. One is what do you call it? The land value, right?
Yes. Yes.
And what is the other term? I forget.
Improvement value.
Huh?
Improvement value.
Yeah, improvement value. So there is a land value. Let's say it's a $500,000 property,
Mhm.
500K. So the land value or assessment value, they call it assessment value, right? So
Mhm.
land
Mhm.
value,
That's the
assessment
grand
value,
total.
yeah, assessment value is the grand total. Okay, so the land value might show as 100,000, right?
Mhm.
And then the improvement value will show as 400,000, right?
Mhm.
So
Mhm.
basically, this is the same thing with options. There's two parts. One is the time value, one is the
Mhm.
intrinsic value. The stock has to cooperate with us to move in that direction of the strike price, which we want is 330. It has to
Okay.
just move towards there. It doesn't have to go there. And as it's moving, options will move accordingly. If it stays kind of flat and we are losing the amount of time and you hold it till the end, you're going to basically just flip,
Lose.
just buy. So
Yeah.
bottom line is fast options. Let's say you have, and we do this sometime. But you have to be quick on the trigger. Let's say you have 2 days left.
Mhm.
You bought it on Wednesday, and you sell it on Friday. If the stock doesn't move, then by Friday, those options are done.
Yeah.
Exactly. So the bottom line is the best thing to do. Let me clean this out now. This is okay.
Yeah.
I
Yeah.
explain
Yeah.
this to you. Okay. So
Mhm.
what's the best approach? There is no one rule in trading. It's very flexible, but there are some key fundamental approaches. Number one, rule. Rule number one, always buy time.
Always by
Now,
time.
when you say always buy time, How many time? I mean, how long? I don't want to buy, like if it's a fast moving stock, which I know is going to move within 5 days, within 7 days, I don't want to buy 1 month out, because the
Mm-hmm.
more time that you buy, are you going to pay more or less?
In a fast moving one, it has to be less, I
It
assume.
doesn't matter if fast moving or not. In a call, there are two components: time
Mm-hmm.
and then the actual value, which is known as intrinsic value or the core value
Mm-hmm.
or the land value, whatever you want to call it. So
Mm-hmm.
intrinsic value. So if you buy more time, if you buy something 1 week out, or if you buy something 1 month out, which one's going to cost you more?
By the time the 1 month.
Exactly, because you're buying a lot of insurance time, right? You're
Uh-huh.
paying more
Uh-huh.
time. So this is going to be more expensive than this.
Mm-hmm.
Correct. So if that's the case, then this intrinsic value is also going to be higher. So bottom line is this call will be for for 1 week is going to be one price, and for 1 month, because you have so much time left, a lot of things can happen.
Mm-hmm.
You will be paying more. You'll be paying more. Okay.
Mm-hmm.
So
Mm-hmm.
what's rule number one? Rule number one is on a fast moving stock, which are the tech stocks, right?
Mm-hmm.
Like Uber, like Nvidia, like
Tesla.
Apple, like Tesla. Tesla is a let's put it this way. I nailed the first two trades, and the last lottos I lost. But net, I won very nicely because the first two trades were fantastic. I
Mm-hmm.
wouldn't recommend, unless now Tesla had a great piece of news over the weekend that the Chinese government is going to reopen the Tesla Gigafactory in Shanghai this week. Now the stock could jump a lot, but remember one thing about Tesla. For somebody who's new, you can put a little bit of money in Tesla,
Mm-hmm.
but it is something like it can make you a lot of money or it can just smash you. Like what
Mm-hmm.
it did on Friday, when I look at the charts, it didn't do anything wrong. But look what happened to the lotto options, because those options we paid around $2, right?
Mm-hmm.
So I bought a couple. I didn't go nuts. If it went, that two would have been 15.
Mm-hmm.
But it didn't go, so I managed to get out like around I think most of my out was around like 60 cents, and some of them went to zero. But the fact is Tesla is a very fast moving stock, and
Yeah.
if you're going to play it, then you got to watch the charts very carefully. And if there is an
5 minutes.
actual, when I look at Tesla's chart, and I'm going to show that to you on the screen, um, the chart is actually telling us this thing is going to jump up 60 points, no problem. That's the chart telling me. Okay. And I'm going to show that to you, what the way I look at it. All
Mm-hmm.
my technical indicators are telling me Tesla's going to jump. Not it doesn't matter. They're all pissing on Tesla right now. They were loving it 5 days ago. Now they're like, oh, Tesla's overvalued. The stock is crazy. Everyone's mad, right? That's what
Mm-hmm.
that's the job of the idiots on the TV. That's their problem, and a lot of other idiots who hate Tesla. So bottom line is that has no correlation or connection with what the stock is going to do over the next
Mm-hmm.
week. So saying all
Mm-hmm.
that, let's leave that alone for a minute. So number one, always buy time. What is time? You always need to have somewhere between 5 to 7 trading days, not calendar days.
Yeah.
Okay, trading days. So you count the trading
Mm-hmm.
days. You don't count Sunday or Saturday or Sunday.
Saturday or
Trading.
Sunday.
Yeah, you don't count that. You count the number of days it's trading, right? So number
Mm-hmm.
one, always buy time. Number two is for a new trader who is just learning how to drive this, machine of trading, cap your losses. Your losses should not exceed 60%. So if you buy something at $1, let's say a lotto, and by the way, the lotto, what we mean by lottos is anything less than $2, just so you know. Okay, lottos
Mm.
is less than $2. So it could be 10 cents, like the Clovis 15 cents I bought 20 cents. The freaking thing went to 75 cents.
Mm-hmm.
Clovis, it's like I sold a bunch and then I bought more time. I had the February 21st, a lot. I was buying that 20 cents, 15 cents last week, you know what I'm saying? And the week before. I told you guys, like, it's like, what the hell? If I lose, fine. And by the time I saw it, it was a decent position. Let's put it this way. I had more than 80 contracts with an average cost of 20 cents, because these were lottos, right? I had actually more than 80 contracts. I'm just giving you an idea. And I sold almost, like I said, a majority of them. I managed to get around 70 cents, because that's where the stock went on when the stock bumped on Thursday. It had that big run. Those calls, these are the February 21st. They went as high as 60 to 70 cents. That's a big move. That's 300-400%. And on this is like playing penny stock, except it's option. So the bottom line is, and then I bought more time. I went into more. I already had it, but I added more of the March, so that I have a lot more time left. March is more than and the March monthly expiration, which expires on March 20th. March 20th, yeah. The third Friday of March is March 20th.
It's closing day.
Let me see here. Let me look at the calendar. March 20th is the third Friday. Correct. So a lot of things will happen. The stock could be 14, or if it slips, I'm going to buy a little bit more. I'm going to be watching the charts. The chart on Clovis looks pretty damn good. It's a more complicated chart, but it looks pretty damn good. And I've showed it a few times. One has to look at it. It's kind of a real method, what we call the triangle formation. This is a very powerful move. That means something big is about to happen, and the big money is basically buying, and they like to fool and shake out the small traders, which is us. All of us are small traders compared to the big money, right? The big money are the 10 million hedge funds, Wall Street banks, and stuff like that. So looks pretty good. So anyway, so I bought more time. So number one is cap your losses at 60% if you have a large position. If you have a small position and you're down from $1 to 40 cents, it's not going to hurt you. But if you have a large position, and let's say, somebody is trading with $5,000, right? And they have 3,000 of that in one position. So let's say they have 30 contracts at $1, right? So remember, one contract is 100 shares, so 30 contracts, is 3,000 times 1, 3,000 bucks. So if that $1 goes to 4, they just hit a home run. The 30 contracts, 30 calls is going to be worth 12,000 bucks. Now, there's a lot of trades which have done that. But what if it, always think about what if it doesn't do it? What if these 30 contracts and you're holding it towards expiration is starting to fall? So the best is on large positions, cap your losses at 60%. Now, here is where the market becomes difficult. If somebody doesn't understand the charts, a lot of times the market will, and I just showed it I just show it almost every week where the markets pull back within the levels that I'm showing, and the next thing you know, the next day it goes nuts. Now, I'm not guessing. I am making a calculated bet based on my charts, based on the oversold, overbought conditions, right? Like what we call stochastics. And that's why getting familiar with a stock chart, looking at the indicators, is it oversold? If it's very oversold, that means, like we say, look right there, that's mRNA. So look how the stochastics, it's very simple. When it gets overbought above 80, okay, the stock is going to pull back a little bit. That's exactly what it did. See? Here it went above 80, pulled back a little bit. Nothing crazy, $1. Now it's starting to move. And look what happened on Friday. That's a big move. You know what I'm saying? And then it closed above here, 23. Look where the stochastics are. They're coming off the bottom.
Yeah.
Exactly. So you see that? So this I
Yeah.
explained many times. I have multiple videos on this, how to read these things. This is the simplest way you can read whether or not it's good to just sell and get out, or whether to hold tight and buy more, what we call dollar cost averaging.
Yes.
Okay, dollar cost averaging is simple. You buy a call at 4, it's down to 1. Let's say you bought one at 4, that cost you $400.
Mhm.
You bought one more at 1, that cost you $100.
Mhm.
Now here your cost basis is 4. You paid $4 for it. Here
Mhm.
it's 1, so now 500. So what is your average cost of your options,
250.
right? Exactly. There you go. So all you need is the stock to turn and go, and your 250 will go to 5. So
Yeah.
you will have 100% return on your money.
Mhm.
Instead, if you held it at 4, you would have only 25% return on your money, correct?
Yeah. Correct.
Now,
Correct.
here is something. Reality of the business. Not everybody, and believe me, I have so many great ideas um, that and aside from the ones that I post, I also have other trades that I do quickly on my side or hold it. It's not possible for us because we're not running $20 million funds here. You know what I'm saying?
Mhm.
So the bottom line is let's say somebody's a bigger trader and they're trading with 6 figures plus on options, which is great because with 6 figures plus on options, if you know what you're doing, you can make $1 million.
Mhm.
Even with 5 figures, I have had traders who have made $500,000, because they take larger positions.
Yeah.
But the fact is, and the risk is this: if somebody doesn't know, I mean, not know, is in the process of learning, and they're playing with, and they have a lot of money to play with, but they are not fully trained,
Understanding.
understand, they're going to lose it just like that. The
Mhm.
best part is to start off in the 4-figure range, right? Whether it's 3 grand, 4 grand, 5 grand. Yes, it's
Mhm.
frustrating because you don't have the money to trade some of the other options, which are a little bit more expensive, right?
Yeah.
Or you can't get into multiple ideas. Like at any given time, I have 18 to 19 positions, just so you know, running. All right. Uh,
Mhm.
well spread out. Some of them have a little bit more, some of them have a little bit less. Some of them are complete lottos, lots of calls, like General Electric was a big winner, still going to keep
Mhm.
on going. Okay, 20 cents, boom, goes to 60 cents, 80 cents, bang, I'm out. I buy some higher strikes. So I have
Yeah.
18 to 20 positions running at some time. If the market
Mhm.
gets really tricky, then I will lower those number of positions down to maybe 6. All right.
Mhm.
But if it's
Mhm.
a long-term biotech positions, I hate taking it out because what's happened a few times before in past years, I have taken a position down and then a week later, that freaking stock has gone nuts. Either got bought out or some great news came out about a drug approval, right? And
Mhm.
I'm just like, what the, you know what I'm saying? Like I didn't hold it. It's happened, believe me. And it's that's more frustrating. It's more frustrating
Yeah.
not to have something you knew it was going to do it and it did it and you don't have a position. So
Yeah.
saying all that, coming back to the technical part of it, and that's just standard procedure. I mean, but in order to manage it, there's no perfect way. But if it's a biotech stock that my charts are showing is going to go higher in the next month or two, I'm going to sit on that few calls that I have because when
Mhm.
it goes, those few calls are going to be worth a lot of money. Whether
Yeah.
it's Clovis, whether it's the other one that went and broke out, Alnylam Pharmaceutical, it was up nicely on Friday. That was a real technical breakout. Whether it's a company called ABMD,
Mhm.
which looks like it wants to go to 240, used to be a $400 stock. Whether it's, I'm talking about biotechs, whether it's MYOV, which is a very powerful company, stock's only 13, the calls are only about 35 cents to $1,
Mhm.
right?
Mhm.
Any day, boom, takes off,
Booms.
you know,
Yeah.
because those are unknowns. I'm not in the biotech business. I'm following it from the outside.
Charge.
The charts will show you something, but what they will never show you is when they are going to present that data at some conference and the stock just go nuts. So I better have
Yeah.
some position in it. Okay,
Yeah.
those are cheaper calls. So let's go back to the best. The best approach is to buy time, cap your losses on larger positions
At
at
60%.
60%. So this way, if it's a 5,000 thing, you are down 3,000, which is not a good thing. But the fact is that you do not want to have a large position in one stock. That's
Yeah.
the number one. Okay, and buy time.
Yeah.
Here's the other secondary approaches, and these are very important. So, best tactics.
I don't see the little things you're writing, by the way.
Oh, it was just covered up, and right. Okay, let me clean this out. Let's clean the screen out. Drawing tools, erase all drawings. Perfect. You with me so far?
100%.
Okay, best tactics. Number one, cheap calls for small accounts. All right? Slow and steady. Get a couple of hits, couple go down, you're not on the street. You know what I'm saying? So cheap calls, swing trades. In other words, you're buying time. Number three, take profits quickly, even though it goes a little bit higher. A profit is a profit, right? So money in the bank is money in the bank. Take profits. I'm not going to say fast, but let's say you bought something at $1 and it's at $1.40. You're up 40%.
Yeah.
I always say on my thing, sell full or partial profits, right? I'm not here on my size account, I'm not here to take like little profits, but I'm not going to get that greedy if the market opens up like it does many days. And I said the day before when the market was down that it's going to go higher, and then it opens up 100, 200, 300 points at Dow Jones, to sit there and say, oh, great, I'm going to hold it. No, I'm going to sell first, and then I'm going to re-enter at a higher strike price or whatever, because within 15 minutes of the market opening, if it's hit my levels, you've seen that happen a lot just in the past couple of weeks, the sell programs come in, right? So why am I going to give everything back to those machines and sit there like an idiot, even though I was right the previous day buying it cheap, right? So take profits fast. For small accounts, 40%, good. If you have let's say somebody has a $2,000 account and they're up 40%, that's $800. So what's the rule of thumb? So you take that 800, okay, now your account is worth 2,800, right? So instead of piling in and using up all of the 2,800, you want to use, let's say you made 800 bucks. You don't want to give back all of that 800 back to the market, and the market is fast at taking money away. Trust me, it's happened to me. It doesn't feel good. So it's just like you had it there, and the frigging machines came in, dropped the market 200 points on some bullshit news, and you're like, what the, and it is not your fault. People like to blame them. People in trading, people like to blame themselves. Man, I should have done this. Sometimes you tell yourself, you're not to blame. You're learning from the process. You're not to blame because the markets are so fast. You can't blame yourself. These are not normal. Look, these markets have been like this. I used to tell people years ago, I started the service in 2014. So it's been 6 years now. I used to tell people from day one, machines are going to get faster, 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 faster. That's the reason my service delivers these type of results, because I have accepted the fact that this is no longer grandpa's market where everything just goes up slowly and goes down slowly. And if you read a lot of other services and stuff, they always think the market's either going to go all way up or way down. Like they think like everything's just like, oh, okay, if you follow this, no. The markets are in a big uptrend, but you'll get 600, 700, 800 point drops without breaking the technical chart. You've seen that just in the past 10 days. Right, exactly. So saying all that, you take out of the 800, you don't put all of the 800 in there. Maybe take 600 of that, or maybe take half of that, 400, and re-enter either the
Mhm.
same position or something else.
That was one of my mistakes.
That's fine. Mistake is you're a great motivational speaker. A mistake is nothing but a learning process.
Mhm.
And then you got to think like that. A mistake,
Yeah.
like one thing about trading, which you understand, never
Mhm.
personalize your losses. You feel like, there are days I felt like shit. I mean, because my trades are bigger. I'm like, what the F, I can slap myself. I'm like, what the hell, fine. Wake up. Not going to do that again. Adapt. So yes,
Yeah.
that's pretty much, without getting into detail, that's pretty much, what happened to you. And if that mistakes don't happen, you're going to do the same mistake at some point.
Yeah.
Okay, exactly. So remember that you're going to do the same mistake at some point. Better to do the mistake now than, God willing, 3 months from now, your account's much larger. You come into some more money, so you can trade more options and more stocks. Rather learn the mistakes on from this level than when you're dealing with bigger money. You know what I'm saying?
Yeah. Yeah. Yeah.
Exactly. Now let me continue with this. So you enter with the 400, and then let that play. If that 400 goes to 600, you made another 50%, and you
Mhm.
have kept most of your money on the side. So this
Yes.
is another question a lot of my new members ask me. Like, you keep, he says, Frank, I know, you're dealing with a bigger account, and believe me, a years ago, I started off with a much smaller account, and I made my account so big. I lost a bunch because I knew technical trading, but not to the degree I do right now. Now I'm like a robot, you know. And I like throw in the dice. I like charts. And I know companies. I'm into tech companies and stuff. So back in the 2000s, I was just like, man, I took like I don't remember at that time. I think I still have the copies. This is when I was working, and I couldn't really trade that much when I was working because I was on the sales and institutional research, so they didn't allow us to trade that much, right? So I'd like
Mhm.
put in a couple of trades on the side on my own account, and oh boom, like 8 grand to like 60, like yeah, because at that time, like some of these tech stocks used to go nuts, right? So I would take some down, but my discipline about managing money was nothing like today. It was just like just throw it in, happen. So that's all fine and good till the market bites you back, and things happen. So small gets big in this type of
Mhm.
market because the movements are bigger. So that's a good thing. So the bad thing is if you put too much into something, then that big can get small very quickly.
Mhm.
You know. So what? So the other thing about what was I going to say? So take profits. Profit management is key. I am not. I unless, and this is one of my most important things that I've learned because I rely on my charts, my tactical charts, as I like to call it. So we're going to
Mhm.
call it TC. This is my lifeblood. This is my ultimate like GPS. So unless full technical breakdown, right?
Mhm.
Not the fake like up and down type of stuff. Unless full practical breakdown, and this I'm just talking about myself. Anyone can do what they want.
Mhm.
I do not take full losses. Okay? As long as I have time, right? Remember we talk about time.
Mhm.
As long
Mhm.
as I have
Mhm.
a bunch of days, I do not take full losses. In other words, I don't panic and sell it. Yeah, I might feel like shit. Believe me,
Mhm.
every time I felt like real shit, within 24 to 48 hours, the market has gone up 800 points. Okay, because I'm following my charts. I'm buying the falling. Dollar cost averaging simply means you're buying cheaper. That means your profits. I mean, that means your P&L on your account is lower, right?
Yeah.
So it doesn't feel good, but what doesn't feel good within reason is what's going to give you the biggest reward.
Yes.
It's the same thing in life and the same thing, and you got to do things that you hate. I mean, there are things we put away, and then we do it at the last minute. We get it done. We're like, yes, we got it done, and we ask ourselves, why didn't we do it 2 weeks ago?
Mhm.
You know. But sometimes
Yeah.
sometimes when you do something in the last minute, your mind is so pumped up, you actually do it better, right?
Mhm.
Because
Yeah.
you're doing it at the last minute. You're juiced up. You're not scared anymore. You're like, it's like F it. I'm gonna go hit that. Whether it's a financial debt collection or credit card, or you're fighting somebody on court, you're like, that's it. and you go in there, you're so pumped up because you know it's your hero or zero, right? So sometimes I'm not saying that people should do that till the last minute, but I tend to work extremely well as the tension mounts more, you know? So yeah, exactly. So anyway, so the same thing applies with trading. So bottom line is I don't take full losses unless I see the chart breakdown. So that's why it is so critical. It is so critical that that people take those advanced coaching classes. Now, what I want you to do is get a bunch of guys together. Part of the, and you don't have to worry, you know, you're on me. So the bottom line is that let them sign up for this ACA session. The faster they take it, the more money. That's almost a guarantee. I don't like using the word guarantee. There's nothing guaranteed, but it's almost the highest level of certainty that they're going to keep more money in their pockets and lose less, and that means they're going to be happier. So the sooner they do those classes, I mentioned it to Jeanette, and of course Ronaldo and stuff, but the other guys who have signed up, and I know some of them haven't signed up, tell them to do it. Is we do a group session, and they go on the members website, sign up for it, and if they do it on a larger group, I'm a business guy, I'll call up the payment team, the ones who actually control the rates, and it's very cheap. It's like $60 a class or something, you know, and these are serious stuff, you know. You pay, you know, like I joke around and say you pay $60 to your dog walker. You know, the guys who walk the dog. I mean, I love walking my dogs. I'm never going to pay $60. You get a cleaner in the house, they're charging you $100 thing.
Yeah.
You know?
Yeah.
Exactly.
Yeah.
So what's $60 to make yourself richer? I mean, it's like a joke. So some people say,
Yeah.
you know, so once they do it, let's say we got like 5, 6, 10 people in there, I'll give them, you know, I'm sure the payment team, which is PayPal Merchant Services, they'll give them another 10% off. You know what I'm saying? But the sooner they, believe me, I really cannot explain how important it is. The sooner they do it, and I really get into the explanations of it, and I do it very simply. I have samples of that on my YouTube channel under new member introductory videos. But one-to-one, when I do it with a group and stuff, they'll be like, yeah, that makes sense, and then they'll apply the same principle. So saying all that, talking about losses, if I have a large position, let's say an option, the higher the price of the option, let's say an option is $8, like something like an Amazon, something like a Tesla. Tesla option can be cheap, but they're not that cheap. Netflix is in the middle. So let's say $8 and it goes to 16. And let's say I have 4 calls. 4 calls at $8 is $3,200, right?
Yeah.
Yeah. So I'm not ready to give out, like blast away my 32. Now 4 calls, 32, 4 calls at 16 is 6,400, right?
Yeah.
So one of the most important thing about options is not always ROI, which is your percentage return, which we talk about all the time.
Yeah.
One of the most important things about options trading is what? Is the dollar profit, cash.
Yeah.
Dinero.
The PL.
You know what I'm saying? The PL. Well, this is PL too. This is PL too. ROI percentage up 50% is a PL, even if it's going higher. But if I'm going to have a higher priced option and I'm up $3,200, I'm out of town for that till I re-enter that trade back. Now, if I have an option, this is the important part. ROI is very important because it gives us a measure of how much we're doing. But what is very important for big accounts and small accounts is how much cash you made on that trade. So if 50%, this is 100%. From on an $8 call goes to 16, that's 64. That's $3,200. You just pocketed, right? That's beauty.
That's gorgeous.
That's beauty. Exactly. That's like, you know, you did your week, or some people, like, they have their goals like 4,000 a day. You can't do it every day, but let's say on average, that's a beauty. You know, that's you're making 80,000 a month, and believe me, it's not that hard. And yes, you will have losses in the middle. So somebody says, man, you got to have a lot of money to do 80,000 a month. I said, not really. I mean, I'm not talking about me. I'm talking in general. I said, not really. You can take a $20,000 account and do it the way the systematic approach, like we do it, and make, you know, 4, 5, 6 a week in between losses. In between losses. Some days maybe you took some nice profits. You don't want to trade that day. Perfect. Great. So yeah, it's possible. So saying all that, this is the most important part. Keep your eye on this. We bought like, let's say a $8 call going to 16. I'm out of town on that. Okay, on that trade. Even though that's 16, which has happened with Amazon calls, which has happened with Tesla calls, right? I mean, they keep on just going higher and higher. People who are new, they can't believe it. They're like, how the shit does a call that I put out there at $1.60, it went to 105? I mean, you could have made $1 million of that, but that's a frigging once in a lifetime type of thing. Crazy stuff, right? And that's because the short squeeze, which you understand, the shorts were getting killed, right?
Yeah.
They were losing $1 billion a day by shorting Tesla. And I wouldn't be surprised Tesla does that again in a smaller way. Believe me, it's a very powerful stock. So my point is that keep an eye on this. So that's on an expensive option. Let me make some room here.
Like Amazon, the ones that you put in Amazon, and the one on Shopify, they're expensive.
Oh yeah, now Shopify is very expensive, right? Now we have played Shopify cheap calls here and there, and they still move. Like you can buy it $40 out of the money, they'll still move. Now on Friday, I bought the more expensive ones. Their earnings are on Wednesday. Depending on where that call is, I might take profits, or I might say, fine, I'm betting, because one call I bought at 21, it's at 23. It's nothing. It's like $200, right? But I just want to set my position in the battleground, right?
Yeah.
So now, if that's Shopify, I believe Shopify's chart is sick. I put it out there. That stock can go up $50, $60, $70, like on earnings, like nothing. My calls from 2000 will be like $8,000 or more.
Imagine.
It just happened, but that's a bigger chunk of money. So that's what we'll talk about here, and then I got to wrap up because my wife needs to got to help her with something at 11:30. So the other thing about options is, like we were talking, let's say you have cheap options at $1, and they go to $2. It's 100%. But let's say you had 3 contracts. Let's say you had 4 contracts. That's $400, right? Just the way we had 4 contracts at $8 and it went to 16, right? So 4 contracts at thing. Now you have the same 4 contracts. You're up 100%. So you're basically up. Your profit is $400. So you are at $800. So the point is that somebody who, and this, let's say this is not the, let's say their account is on not 400. Let's say their account is 4,000, right? So question is, this stock is still moving. So question is, at this point, you might say, you know what? I'm up $400. If I lose that, my account is still doing fine. I'm not up a lot. Even though it's sweet for one quick trade, but they might leave it alone and let it go and buy or sell that or move to a higher strike price. That's the smart way of doing it. You understand that, right?
Yes.
So if you bought the call at 1 with the strike price, let's say of the stock at 10, the stock is now at 12. What I suggest that people do is sell that, take that 400, and then buy the strikes at 14, because the stock directional bias is higher. So but if it's a bigger call, you sell it all. Or second option is, that's option number 1. I mean, sorry, the choice number 1. Choice number 2 is you sell half that. Sell half. So in other words, you took 200 in profit and you leave the other 2 alone.
I see.
You got it? So this way, if it blows up, you still kept $200 in your pocket. Blows up meaning if you lose all the 400. But the smart way of doing it is to buy the higher strike.
Correct.
Now,
that's the best approach.
That's the best course. That's the best course. Now, here's the other thing, important. Generally speaking, if a stock is at $10 and you buy the calls at 10, generally speaking, according to the options rules, if the stock goes to 11, okay, and you stock is at $10 and the stock goes to 11 and you paid the option $1, where should the option be? Because you're in the money. Your strike price is 10. That's what we call ITM, right? In the money.
Mm-hmm.
It's your basic options thing. So you bought strike price at 10, expiration, strike is at 10, your expiration is, let's say, month away. Your expiration is 320. Stock is at 10. Stock moves to 11. You played $1 for the option. How much will it be? It's very easy.
It should be. It should be.
Don't think too much. It's very easy. You bought it at 10. You're in the money. Now the stock is at 11. $1 option should be where?
At 20%. No, 10%. I'm sorry.
The stock, generally speaking, if the stock moves 10%, generally speaking, if you bought the call at that price, like at $1, which is expensive for a thing, it should move dollar to dollar. It should be at 2.
Really?
Yeah. It should be at 2, but it doesn't always happen like that, right? Because when you buy in the money, that call should be moving dollar to dollar. Let's say Amazon was at 2,000, right?
Mm-hmm.
And you paid $10, and Amazon then goes to, I'm trying to think here. Actually, Amazon's not a good example. But generally speaking, if you buy in the money, it should go to $2. But most of the time, like you said, it probably go up 20% instead of 100%.
Mm-hmm.
Because of the fact that you bought so much that you bought so much time.
Yeah.
So this brings me to the last thing on fast moving options, where you really want to get your returns real fast.
Yeah.
Stock like AMD, which is a great cheap options play, right? You can buy calls at 40 cents and sell them at $2 or $1. AMD, Advanced Micro Devices, very powerful stock. So these type of stocks, you generally tend to see a very tight connection between the price of the stock and the price of the options. In other words, AMD, let's say when it was at 40, it's almost at 50 now. If it goes to 42, you'll see the options up like 40%, like no problem. So the last thing I'm going to say on this thing, and you're going to talk to the crew who actually signed, all the crew who actually signed up, get the other guys, some of them you think are going to be, look, this is a business which needs a little bit of learning. But people are hungry and they learn a little bit. Nothing is more explosive in life than some brains and balls. That's it. It's B&B. It's brains and balls. Seriously. And it doesn't matter because that's the way I always looked at it. I always looked at it like if you have a lot of balls, yeah, you'll hit some good runs. But then the market's going to chew you up because the market's got bigger cojones than anybody else, right?
Yeah.
Those machines are man eaters. They're like sharks, right? So if you have brains, which means knowledge of how the machines are going to work, and that's where the charts and all this stuff come in, then you're going to beat that monster. That's it. So, like I say, brains and balls. So, but you gotta have a powerful, actionable brains, not the brains which think too much. Brains who think too much, they're like sitting there saying, this will maybe happen. Oh, wait, boom, it goes. And that's why you see so many of the idiots on TV who are very smart people, and they're always wrong on the market. They're always wrong on the market. They don't tell you to buy when the markets are like technically oversold or this and that. They're like, oh, we'll wait and see. Yeah, by the time you wait and see, the market's already up 800 points. Case in point last week. Exactly. So brains and balls. So the faster that we can polish the brains with the training stuff, and certainly on a group level, the faster. And then I know you guys definitely have the risk factor, no question about it. But you need to manage yes. And so this type of simple stuff that I'm explaining, and then I move on to a little bit more of the more complicated stuff, which I explain in a very simple way. Anybody can learn, because you listen to a lot of other, what do you call it? These are great guys. YouTube is full of hundreds of all types of different traders and stuff. But some of the ones who, most of them, they either explain it too simple which doesn't work in the real world, or they make it so freaking complicated. And I'm just like, click, gone. You know, I'm serious. I mean, I see on StockTwits and stuff, some guys put up the charts. I'm just like, what the hell is that? And
Yeah.
they're understanding it. So my charts are in the middle. Like there's a
Mhm.
complexity to it, but I also make it simple. And if somebody understands how I'm drawing it,
Yeah.
then they'll be like, okay, I get it. They're not that complicated, you know, with the arrows, the resistance, this and that. And I've
Yeah.
seen charts out there which are like Ichimoku cloud. It's like, it looks like the Bollinger Band, you know, it looks like, you know, like the cloud cover, like
Yeah.
we have on the thing, but it's called the Ichimoku cloud. Not that hard, I'm sure. But even to this day, I don't know how to read the Ichimoku cloud.
Huh.
And then it's like, forget it. I don't want to make it that complicated where I have to think about how I'm understanding it. I want to act more, but within reason. So saying
Yeah.
all that, the final thing that I'll tell you, stick to cheap options. And cheap options which move. So companies like AMD, Nvidia is cheap, but not that cheap, and that stock is powerful.
Yeah.
But the calls don't move that fast. Just so
They
you know,
don't.
they don't.
Yeah.
The
I
stock
have
could
a
be up.
bunch.
Yeah, that's fine. That's fine. And but the calls don't. It's known as the implied volatility. So what I want you to do is go on YouTube and just type in understanding options characteristics, or you know, and there are amazing videos by people I don't even know. You know, I used to listen to it way back, which will explain to you why some options move faster, why have moved less, even though they're all good. So
Understanding options characteristics, right?
yeah, absolutely. And just listen to the one that makes more sense to you. And there's so many, it's like I can't even tell you. I mean, they have
Yeah.
views like freaking 5 million people, like, you know. But it's good because once you know the basics, then I can move you guys to the
Next
to the
level.
medium level, and then the advanced stuff. I'm going to show you why some of these things
Yeah.
work. So AMD is good, Uber is good. These are all options which are not that expensive and they move.
Mhm.
Okay. Uber, I made some very decent money on the earnings. Then I bought the ones with a higher strike, like 41s, and they were up 80%.
Yeah.
Nothing beats that, you know. Then you got so all kinds, because there's so many different types of stock in the market. Sometimes people like Boeing. Boeing calls move, but it depends whether Boeing is up 5, 6, 7. When Boeing is up $1 or $2, their options don't do anything.
Mm-mm.
When Boeing takes that big sharp move, right? That big candle, then all of a sudden those options which were at $2, $3. One call, I have a lot of images of option moves that I have on my Dropbox, and I'll show it to you guys one day. It was up 1,000%. I only had a couple. Yeah, because Boeing that day moved $10 on that news. That
That's
remember
crazy.
the FAA guy said, okay, you know, it looks like we can allow the 737 Max to be up in the
Yeah.
air sooner. Boom! I mean, I just had a little bit. I had the week after. Those moved like 140%, but the ones which were expiring the same Friday were up
They jumped.
1,100%. So
Yeah.
somebody who had them and said, that's it, shit, I lost all the money, just got paid.
Mhm.
And this happens. This happens because the market is manipulated. Okay. There are big players who are moving chess. I'm not saying they know everything, but they are manipulating the market. So why did that news come out on Friday? Why didn't it come out on Wednesday? You know, you think
Uh,
they didn't know? So
they
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 bought
got
cheap.
they bought cheap and they shook everybody out.
Yep.
Exactly. So
Yep.
but my charts on Boeing kept on saying no, gotta buy it, gotta buy it. So and I kept
Yep.
on telling people. So somebody says, man, this, you know, some people say, you know, or no, that man, this guy's like, you know, he really fucking got it. No, I know, yes, I do have more I have more knowledge. I don't have more information. You guys are looking at the same information that I am.
Yeah.
I'm not dealing with insider information, but the only
Yeah.
insider information I'm dealing with is what my charts are telling me. So
Mhm.
when I look at Boeing's chart, I'm like, yes. I mean, look at this. I was telling people to buy it here, right from here. It went up nicely. We took some profits, then it came down. But all it did was touch this red line. See? And remember, these lines are all drawn before things happen.
Yeah.
So this is the downtrend line, right? There you go. All it did, it kissed it. It can't be any more perfect.
Yeah.
Like I didn't draw this line after just to show people, oh, I'm really smart. I did this like weeks ago.
It's out of my head. Yeah.
And then exactly, it hit that. All these were looking good, meaning they're all moving higher. See, this moving higher, then went up, and then pulled back 3 days. See? But it's nothing. To me, this is moving higher. The stochastics, that means the smart money, or there were no real big sellers. And then, boom, that news comes out.
And it goes all the way.
And it goes like nuts. So whoever like freaked out, like, oh my God, lost. Boeing went from 320 exactly to the gap. See?
Yeah.
That's the gap. And then the next day, it created a small pullback, which was Friday. See?
Yeah.
This is known as an insight day. So that's another thing that I teach extremely well on my session, on my coaching, is how to read candlesticks. Candlesticks are money in the bank. You know how to read them? They're simple, but needs a little bit of, coaching. You're done. By looking at a candlestick, I can pretty much take a good bet what a stock will do over the next couple of weeks. And this is known as an insight day. It's a small baby red candle still within the gap, hugging. It's like it's like a little monkey on like a little gorilla on the big gorilla's back. You know what I'm saying? So, you see those things, you can see the big, like 1,000-pound gorillas, and you see on TV, like on Congo, and you got the little baby like stuck to it, right? So that's exactly what it is. This bullish engulfing candle is $4 billion worth of money that entered Boeing.
That's amazing.
So this was a little profit taking that happened. Nothing to freak out about. Now, if it breaks and this creates another candle like this, then I start worrying.
Yeah.
And then I either sell and re-enter back, but my technical indicators will tell me if that is a directional change. This is not a directional change. This is baby chimp on mama chimp's back. You know what I'm saying? And, but if you listen to a lot of other people, oh, Boeing was down $4. Like, who cares? Because right now, unless we have a full-scale red candle that takes over the body of this candle, that means the people who bought here, they're all getting out. So you need to maybe sell, sit back, and get in.
Yeah.
But we'll see. But so far, it looks okay. And where is the directional bet? Next gap, right there, 352. That's it. So for this, I buy 1 to 2 weeks out, and let the markets do its job. But this is a good looking chart. All right. So go ahead. Because I gotta start moving.
Yeah, Frank. You see the I check the charts also when you put all these things. I put in and the codes and all that. Trader Swim doesn't allow you.
I'm sorry. Fix your microphone because it's breaking up.
It's good now. Good. All right.
Yes, sir.
Yeah.
Yes, Frank.
So when you put your things, I also put in the chart to see if it makes sense to me. You see the one that has underneath the chart, that you see the volume that people are buying and selling that you always go by. Trader Swim doesn't allow me to get that.
I hear what you're saying, but it's breaking up. So repeat what you asked, but maybe the microphone, move it away. I don't know. So repeat the question again because I'm not getting it.
The chart that you post, right?
Yes.
That they have the volume, the selling, purchasing volume, and all that.
Yes.
That is not available in Trader Swim, right?
It's not available where?
In Trader Swim.
Of course, it's available in Thinkorswim.
I
don't have Thinkorswim open right now. Of course it is. Like, are you looking on your phone or are you looking on your on your computer?
I only trade from my computer.
Oh, that's fantastic. So you're trading from the right place. I mean, I trade off the phone sometimes too, but no, of course. So you're telling me that on your chart you're not seeing volume?
No, I'm not. I don't see anything that you see underneath.
It's real simple. Okay, all you got to do is go on the top. This is not Thinkorswim. This is a different platform. Okay. So let me look for it. No, this is Thinkorswim. This is Thinkorswim.
Okay.
Hold on. This is Thinkorswim. Okay. So, because I cut off the top. 1 second.
No,
yeah, this is no. 1 second. This is Thinkorswim, of course, because McClellan Oscillator I use only in Thinkorswim. So what you got to do is you got to go on the drawings, or you got to, you got to go on the drawings. You got to drop this, okay? When you click the real thing, you got to drop it, and you're gonna look for volume. It gives you a whole bunch of indicators. I think Thinkorswim has like 300. Look for volume, type it in, and then attach the volume to your thing and save it as your chart.
Drawing, I see the drawing tools.
Drawing to, this is what I'll tell you to do. When you go to Thinkorswim, they have unbelievable tutorials how to set up your charts.
Okay.
Go ahead and it's right there, on the tutorials on the Thinkorswim. Yeah. Look for there. And if you can, then what I will do is tonight around 8:30 when I do the webinar, I'll take 5 minutes and show you how to pull it up.
Good.
Like my charts have been set up for a long time, but what you got to do is go to YouTube and type in. YouTube is like everything. So you type in how to set up charts on Thinkorswim.
How to set up.
Yeah, how to set up charts on Thinkorswim. Sure. Now, how to set up my type of charts. Once you set up the volume, once you set up the full stochastics, it's all on the drawings, by the way. Okay. On the drawings, you have to go thing and studies. So I'll show you guys this evening, but just be one step forward. Go to YouTube or inside Thinkorswim, there are tutorials how to set up charts and see which one's the easier one. They tell you how to do it. So now, let me say last thing. So right now, you just have this. You have the front, right? The external price movement. Yeah. What do you have at the bottom?
Nothing.
Okay. So we'll set it up today.
Yes, empty. It's black.
But yeah, that's crazy. That's like you're driving with one eye shut. You know what I'm saying? So seriously, so it's crazy stuff. All right, so go to, again, I repeat, go to Thinkorswim. They have tutorials, how to set up charts, or the best way to do it is to go to YouTube and just type in, how do I set up volume, price, stochastic, that type of stuff. And one of these guys who have the, tutorial videos will just show you how to do it. All right. And if it still doesn't work for you, then tonight I'm going to quickly take a minute and just set up a empty chart and show you how to set this up.
Okay, I'll text you before if I can figure it out. I'll get on YouTube.
Yeah, no problem. And in the meantime, make a couple of phone calls. I'd like to start doing some active advanced coaching sessions. Advanced coaching session next week, because the market is going to start to is already busy. But we'll start to get real busy. And I want you guys to be prepared. All right,
Frank.
Yes.
One last question.
Go ahead.
We have a lot of options firing on Friday the 14th, but a lot of them they're negative. What do you think should be the best approach on that?
Well, it depends on which options we're talking about. February this coming week, as we get into Valentine's Day, generally speaking, you get at least 1 to 3 days when the market zooms higher. So depending on those options, you can discuss that on the session on tonight's session. You can throw out the ones that you have. I have most of them. I have trimmed some of them. So depending on that particular stock is the one that we're looking at. And then and if I say, then I'll recommend whether or not they should be shifted into February 21st. In other words, you're buying more time, or whether you should hold those depending on the size of the position, whatever, for February 14th. But generally speaking, February 14th, Valentine's, the market normally does not crash before Valentine's Day. It just that's the way markets never really crash before big holidays, shopping holidays. It's just, I told you, the market is controlled. So before Christmas, it doesn't. Before Thanksgiving, it doesn't. Before Super Bowl, it didn't. Before Thanksgiving, it doesn't, because it's a big shopping weekend. And Valentine's, of course, huge. Okay. So it's just the nature of the beast. That's how they do it. Okay. So you can mention the ones that without naming any specific numbers and stuff in the public chat, in the public webinar. You can you say, okay, this one, what should we do? I'll recommend. I'll suggest what needs to be done. Okay.
Good.
All right.
Okay.
And so your job is to go ahead and check the tutorial how to set up the charts. and I'll show it tonight, and then talk to the rest of the crew. I have a list of like 10 people or so who did the free trial, but even the
Mm-hmm.
ones who signed up, next step,
Got it.
critically important, ACS coaching. All right, that's it.
All right,
And
Frank.
give my best to your wife, and enjoy the day, my friend. I'll see
Enjoy
you.
you too, brother.
Thank you so
Bye-bye.
much. Bye-bye.